2023, a year that began with cautious optimism and ended with a potent cocktail of economic woes. From bank failures to skyrocketing national debt, let's raise a glass of cheap wine thanks to inflation to the year's top financial moments. In March 2023, a storm swept through the U.S. banking system. Three major banks, Silicon Valley Bank, Signature Bank, and First Republic Bank, collapsed within a matter of days. Rising interest rates set by the Federal Reserve to combat inflation squeezed banks' profits. Banks like Silicon Valley Bank were heavily invested in commercial real estate loans. Higher interest rates stalled new projects and reduced property values, triggering loan defaults and ultimately bank failures. The FDIC stepped in quickly, protecting depositors' funds and launching bridge banks to maintain essential banking services. While contained, the crisis exposed the vulnerabilities of the U.S. banking system and raised concerns about the sector's resilience to future economic shocks. In January 2023, U.S. debt ceiling climbed higher than the Kardashians' follower count and reached $31.4 trillion USD. Then in June, President Joe Biden signed the Fiscal Responsibility Act of 2023, suspending the U.S. debt ceiling until January 2025 and saving the world from economic doom. For now. However, Republicans demanded significant federal spending cuts in return. Moody's Analytics warns that such cuts could trigger a 2024 recession, causing a loss of 2.6 million jobs and raising the unemployment rate from 3.4% to nearly 6%. Additionally, a prolonged breach of the debt ceiling could lead to a financial Armageddon, costing over 7 million jobs, doubling unemployment to over 8%, and wiping out 10 trillion USD in household wealth, along with a 20% stock market plunge. With such high stakes, Moody advises lawmakers to unconditionally raise the debt ceiling to ensure both present and future prosperity. China's once booming economy was grappling a housing crisis and a broader economic showdown. In January, housing giant Evergrande was crushed under the immense weight of its 300 billion USD debt. Since then, 46 other developers have also defaulted. Property values plummeted by 20% and ghost towns rose. The wider economy, fueled by exports and debt, also took a tumble. Despite a rapid post-lockdown recovery earlier in the year, economic growth stalled. Consumer prices dropped, exports contracted by 15%, and factories faced a 10% decrease in orders. Youth unemployment was so bad that the government ceased publishing the data. August saw the Hang Seng plummet over 20%, while the Chinese yen slumped to a 16-year low. Fearing further collapse, the central bank unleashed its biggest currency defense ever, setting a record high rate against the dollar. With loan defaults also reaching a historic high, over 8 million people are now officially blacklisted for missed payments, underscoring the severity of the crisis and the challenges ahead on China's path to recovery. In October, Hamas launched an unprecedented attack from Gaza, resulting in 1,200 deaths and 240 hostages. Israel responded with airstrikes and ground operations, causing over 17,000 casualties in Gaza. After a brief truce, hostilities resumed, leading to the release of 100 hostages by Hamas in exchange for 240 Palestinians from Israeli jails. The conflict poses a threat to the global economy, with potential repercussions on energy costs if major oil-producing nations like Iran are involved. A worst-case scenario envisions direct Israel-Iran conflict, projecting oil prices at 150 USD per barrel and global growth dropping to 1.7%, causing a 1 trillion USD reduction in world output. This would hamper central banks' efforts to tame inflation pressures in most advanced and emerging economies. The ongoing instability in the Middle East adds uncertainty to the global economic landscape, highlighting the impact of geopolitical events on economic outcomes. WeWork, the hottest startup in 2019, was valued at a staggering 47 billion USD, and Adam Neumann, the company's charismatic founder, was hailed as a visionary leader. But as quickly as it rose, WeWork came crashing down in November with a bankruptcy filing, leaving investors and employees with nothing but a pile of debt and a cautionary tale. SoftBank, the Japanese tech conglomerate that poured billions into WeWork, lost a staggering 14.3 billion USD. Yet, in an ironic twist, there was a winner in this fiasco. It was none other than Adam Neumann. When he was urged to resign in September 2019, Neumann dodged a bullet and walked away with a golden parachute package that was valued at nearly 2 billion USD. So the next time you hear someone talk about disruptive innovation and changing the world, remember the story of WeWork and be wary of charismatic leaders with big ideas and even bigger pockets. ChatGPT and its brethren took the tech world by storm, sending investors scrambling for the next big thing. Nvidia, the chipmaker behind the AI revolution, rose like a phoenix, reaching the coveted 1 trillion USD valuation at the end of May. The chipmaker became the 7th US company to reach that market capitalization, joining fellow tech companies Apple, Microsoft, Google parent Alphabet, and Amazon.com on the 1 trillion USD list. However, the rapid advances in generative artificial intelligence have prompted big questions about the future of work and even human creativity. In March, over 1,100 prominent AI figures, including Elon Musk, Steve Wozniak, and key researchers, urged for a 6-month halt to developing systems surpassing GPT-4. Fearing societal unpreparedness for such powerful AIs, they called on labs and governments to implement a moratorium. This unprecedented call highlights the growing concern about the risk of advanced AI in the hands of an unprepared world. And finally, a glimmer of hope on the geopolitical stage. President Xi's historic visit to the US in November marked the first time a Chinese president had visited since 2017. Notably, the two nations, after years of bickering and trade wars, found common ground on various fronts, including military communication, fentanyl production, artificial intelligence, and even the always contentious Taiwan issue. Both leaders considered the summit a success, suggesting a potential thaw in China-US relationship and the possibility of improved communication and cooperation between the two superpowers in the years to come. In recent Fed communications, Chair Jerome Powell had stated that the Fed expects to start cutting interest rates in 2024, although the precise timing and extent of the cuts are still uncertain. Inflation on a downward trend in recent months has reduced pressure on the Fed to keep raising rates. While there are growing concerns about a potential economic slowdown or even recession in 2024, rate cuts would help stimulate the economy. However, this could change depending on economic data and the Fed's assessment of risks. Geopolitical developments, natural disasters, or other unforeseen events could disrupt the Fed's plans. While markets predict 4 or 5 cuts starting in spring, bringing rates down to 4% to 4.25%, Goldman Sachs and Barclays see only 2 reductions, highlighting the uncertainty hovering over rate policy. The Fed's next move in 2024 will likely be a tightrope walk between easing borrowing costs and keeping inflation under control. As political situations remain tumultuous around the globe and economic challenges still an uphill battle for major powers, let's raise our glasses to bid farewell to an eventful 2023. As we move into the new year, let's not forget the lessons we learned along the way and prepare for the uncertainties that lie ahead. Be sure to like, share, and follow Do Academy for more actionable investment insights.